Hi everyone, this is BabarTradesWorld. In this video, I want to share some tips that have helped me a lot when I'm trading. I trade the market open within the first hour to 2 hours. I trade options. I'm mostly looking to be in and out of a trade within 10 minutes maximum. Sometimes it ends up being longer. But these 3 tips have really helped me ensure that I can increase my win rate, increase my risk to reward, and also ensure that I'm not trying to fight a trend and I'm trading within the market dynamics and what's available on the market. So let's dive straight in. The first tip that I really want to go over is probably the most important. Knowing and understanding your comfort levels is immensely important when you're trading the stock market. What I mean by this is you should know the dollar risk that you're comfortable with losing on a trade. This helps you ensure that you're following your plan, you're executing on your trade, you're executing flawlessly. And what I mean by flawlessly is you're entering and exiting at the right moments. You're not too emotional. It's just enough to keep you in tune and focused on the trade, but not so much that you're starting to become overwhelmed with your decision to take on a trade or you exit too early. Of course, there's other factors that would make you get out of a trade based on what you're seeing. But overall, knowing your dollar risk is really, really important. And there's a really simple trick to understanding your dollar risk. Start with a large amount, $1,000, $750, $500, and keep going down until you're actually comfortable with that level of risk. The other way that I typically like to do it is based on the whole account that I have. I like to risk up to 2% to 3%. Sometimes if a trade is really, really great, I may get up to 4 or 5%, but that's usually very risky. And you want to be able to ensure that you're capitalizing on good trades, but also protecting your capital in the long run. The second tip that I want to go over is in regards to trading the trend. One of the biggest problems that I had when I first started trading was that I was always trying to catch the bottom or short the top. I was trying to be the first one there on a trade. So how I determine what the trend is simply based on using moving averages. This is probably the only indicator that I'll be using. And I can showcase a little bit about how I implement this into my daily trading. So in this chart for QQQ, today is January 10th, 2025. The way that this candle opened here, this red candle, was below this 50 moving average. It was below this doji green candle. And what it's signaling to me is that it might likely be a bearish day. So I'm looking to find reasons to find a bearish pattern, like a breakdown or a sell setup. So we can break down to a smaller time frame and determine if we're correct on our thesis and if we find confirmation to take a trade. For example, if we go to the hourly chart, we can also see here that in the pre-market, QQQ candles were going below the 20 moving average, which is this blue line, as well as the 50 moving average, and starting to make their way below the low of the day from the previous day. So that's another confirmation that we're on the right trend. And then if I go into my execution time frame, that's where I look for patterns on where I want to take an entry and exit signal. So right off the open, we can see here, QQQ was fairly weak. It was showing some overlapping bars here, but overall I could see more red bars here, and they were basically engulfing the previous green bars. This is another confirmation that the trend is going to be bearish. Now I usually have all the time frames in front of me, but when I'm looking at my execution time frame right here, I'm finding a reason to take a trade, and simply it's because I want to see a pattern that I like that shows that it confirms my trend. So right here, we can see this is an opening range right around this area, and I'm expecting the move to go further down. So you can either wait for the initial move down, and what I like to do is wait for a pullback. And this ties into my third tip. When I'm looking at confirming a trend and I want to take a trade, I always try to get a discount. So my third tip that's really helped me ensure that I'm able to take the right trades at the right time and pay the right price, whether it's on option premiums or if it's on the stock shares as well, is that I'm able to get a good price on my entry. I don't want to overpay and I don't want to underpay either. I want to pay the right market price based on a confirmed entry. So typically what I like to do is draw out my criteria for a trade. So if I was to hide the future right here, what I would be seeing during the market open would be this green candle. And I like to wait for a pullback because a pullback equals, getting a better price on the fill when it's an option put contract, or it can mean that, the stock is taking a little bit of a breather before the next move down. So when I wait for a pullback, I look for areas where others might be looking to stop out. So if I look at an entry potentially where most people look around 508.75 and an exit just above 510.30, let's say, that's not an area where I'd want to actually place my stop loss. That's an area where I'd actually look to enter because it would ensure that I get the biggest discount. And then my stop loss would be actually right above here, this red line, closer to 511.50 to 512. By entering on a pullback, I'm able to get a discount and ensure that I'm not overpaying for my option premiums, because when they start moving in your direction, if it's a put contract, they typically go up in price quite a bit. If it starts to consolidate or something like that, then you're just going to have to wait through that and your premiums could take a little bit of a hit. So I typically don't like that. For that reason, I'd rather get on a pullback, include my stop loss a little bit further up, and it gives me a little bit more room to enter into my trade. And once the trade is confirmed, is usually based on the fact if it's holding and closing below the moving average. And look at that. This candle right here is a bearish engulfing candle, taking over all of this previous candle and continuing towards some area where I can look to take profits or scale out. By knowing your risk, ensuring that you're trading the trend, and by waiting for a pullback on entering for your trade, you're able to ensure that you get a higher win percentage. You're more likely to get a trade that follows through in your direction. And when you're in alignment with the market, you're going along with other traders in the direction they anticipate, whether they're using tactical analysis, they're using indicators, they're just using volume, footprint charts, whatever it may be. You want to be in sync with the rest of the market, especially the institution. If you gain value from this video, please make sure to subscribe and let me know in the comments below if this was helpful to you. Thanks again.